It is a pleasure, I have to say, given the gravity of the situation, a mixed pleasure, but nevertheless a pleasure to be here with you at the start of a new era. And I want to pay special tribute to the Campaign for America's Future under Bob Borisage, and to the Progressive Caucus, and to all the others who held the fort here in the dark years, while those of us who really couldn't take it went to Texas. Yet, as we stand here now, in a very real sense, there are no more progressives, moderates, and conservatives. No more facile differences on ideological grounds. Just a job to do and the practical necessity of getting it right. Of regulation, Secretary Paulson says in this morning's paper, quote, "I've realized how flawed it is and how imperfect, but how necessary it is." That is an epitaph on an age. Larry Summers, speaking yesterday, used 3 words to describe the program that we need going forward: speedy, substantial, and sustained. I would have to shift markedly to the left to outflank Larry at this point, and I'm not going to try. Let's first briefly assess the situation that we face. We have, for 2 decades, built our economy on private credit expansion, a powerful, unstable engine that gave us broadband and a lot of housing, but which has come to grief from financial abuse enabled by regulatory negligence, by the abandonment of public responsibility. Situation which I have called the predator state. But now, as in March of 1933, the money changers have fled. They have fled. As a result, the engine has not only stalled, it has seized up. It will need to be disassembled, cleaned, repaired, and tested carefully before it will run again. That's one task before us. But in the meantime, and perhaps for a long time, we will need a second engine. We will need to get another engine out of storage, get it repaired, and get it running. Let's examine what this will take. Unlike, I suppose, many people here whose views I respect, I favored action on the financial system last September. On the 25th, I published an op-ed in the Washington Post calling for 3 basic steps: to protect bank deposits by lifting the cap on insurance and quelling the panic that was taking over the banking system, to stabilize the money market funds and the commercial paper market, and then to recapitalize the banks by buying equity in them directly rather than attempting to put a price under assets which could not be priced because they were fundamentally not worth anything. In the 6 weeks or so since then, these steps have actually been taken to a large degree. One can argue about the details, but the movement has been in a direction favored by reality. That's not a bad thing, and that's not always been the case. They've also worked in the limited sense that the panic has subsided and the payment system has not failed. But these steps by themselves were never going to be able to repair the underlying economic problem. Because the underlying economic problem was not one simply of a stalling of the credit engine. It was not one simply of a system that had run out of gas. It could not be repaired by a dose of fuel. It is a problem of the engine itself. The main elements of the underlying economic problem are pretty much in plain view. They are, first, the collapse of housing finance, of construction, and of collateral, as a result of the subprime and Alt-A mortgage debacle. Second, they are the crisis of state and local finance, both on the operating and on the capital side. Third, as we know very well from the events of the last few days, there is an industrial crack-up led by the major firms in the automobile industry, but surely extending well beyond that. And fourth, lurking in the background a bit, but certain to be an important factor as events unfold, there is the decline in the wealth position of America's elderly as a result of the decline in the value of their assets owing to the collapse of the stock market. That will affect their incomes and their purchasing power going forward. So there's 4 elements, and we can take them up in a practical spirit in turn. For housing, the urgent task is to keep people in their homes, stopping abandonment, decay, blight, and homelessness. That's the problem as it's being experienced out there by American families, by working people, by retired people. A moratorium on foreclosures will buy time, a little time to establish a framework for dealing with this problem. The template for that exists in the experience of the Homeowners Loan Corporation of the 1930s, and we will need a new home loan corporation, perhaps under HUD, to deal with this problem. The task of that entity must be to go out into America's communities and to rewrite and reset mortgages that are not sustainable, that were never designed to be sustainable, that were intrinsically, in many cases, abusive from the very beginning, and make them sustainable so that people can, to the maximum extent possible, stay in their homes as owners or in some cases perhaps as renters, but to stabilize the communities first and foremost. 40 years at 4%, whatever it takes, rent to own. This is not a small enterprise. In the 1930s, the HOLC employed 20,000 people to issue and monitor 1 million mortgages. And we have probably, you can think about it in gross terms, maybe 5 million to deal with now. But until that's done, the housing sector will not be stabilized. The state and local financial crisis requires revenue sharing, an immediate fiscal bargain that says to the states and to the cities and towns, don't cut your services, Don't lay off your teachers, your firemen, your police. Don't close your parks and your libraries, and don't raise your taxes. And the federal government will come in for the time being, at least the next 2 years, and fill in the revenue gap. Right? This is to prevent the situation from getting worse, because as those services are cut, neighborhoods will continue to decline. People who are laid off, guess what, have difficulty paying their mortgages. People whose taxes are raised don't have money for other things. If revenue sharing was progressive enough for Richard Nixon, it's progressive enough for me. Revenue sharing, by the way, could be enacted. It's a simple process. Could be enacted as soon as Congress returns, made retroactive to the 1st of January, and put on the president's desk on the first day. How much? In round numbers, let's go for $100 billion for the first year. Unblocking credit for public capital investment will require a new channel, a national infrastructure fund, a concept which has already been discussed here at some length, but which was pioneered, I should say, by Lee Hamilton at the Joint Economic Committee and Jim Howard at Public Works as far back as 1983, when, as it happens, I was the Democratic staff director of the Joint Economic Committee. It is, again, a fairly simple mechanism, a financial device, a revolving fund that could be passed in January and on the president's desk on the first day. How much? In round numbers, let's start with another $100 billion this year. And obviously, as has already been discussed, measures which are intended to finance the reconstruction of America, to build capital assets, should not be subject to rules such as PAYGO, which are in any event not appropriate for the current economic crisis. The industrial crisis poses an immediate peril, and not just to one company, General Motors, but through the supplier chains, which are likely to fail if that company fails, to all of American automotive production. And then, if that fails, to the revenue base of all the states and localities that rely, where that industry is important, and to all of the housing in which people who work in that industry live. There is an ecological problem here, which is an immediate and grave threat. Meeting that crisis with a loan, again, even if it does nothing more than buy time, is an act of minimal prudence. There should be a vote on that as soon as possible. Tomorrow, this week. It may fail, but if meeting the crisis meets an obstructive minority, there really is no problem in American politics that cannot be solved by further reducing the size of that minority. Going forward, the objectives are first, orderly restructuring, and second, a return eventually to commercial viability on sustainable and also environmentally acceptable terms. Orderly restructuring, however, is the problem immediately in front of us, and here I have two ideas. One of them seems to me to be just a stroke of simple genius, not mine, but rather I attribute it to a very distinguished economist, Teresa Ghilarducci at the New School, suggested it in a forum a couple of days ago, and that is lower the age of Medicare to 55. Take that burden off the books of the companies, bring it on to the public sector, and allow, in particular, a great many workers who are hanging on because they cannot afford to retire, because they cannot afford to lose health care, to do so. A great many things would become unblocked if that simple step were taken. Secondly, replenish the Pension Benefit Guaranty Corporation, and so as to raise the present value of its guarantee. Just as we can guarantee deposits, we can, if we choose, guarantee pensions, at least up to a certain amount. Increasing unemployment insurance and food stamps, as has already been discussed, are obviously direct and urgent necessities. They all tie in to the problem of stabilizing not only the industrial economy, but also the people who live and work in that economy. We cannot repair everyone's individual losses in the stock market, and nor should we wish to do so. But we can ensure that the senior population as a whole does not become poor, that individual members of that population do not become poor, and that the purchasing power of that population as a whole does not decline and drag the sectors of the economy that rely on it down with it. And the way to do that, the simple, direct way to do that, would be to increase Social Security benefits. Across the board, something which has not been done for a generation. Not since, again, my current liberal icon, Richard Nixon, did it in 1972. If you raise Social Security benefits by, say, 20 or 30%, then you're talking roughly $120 to $180 billion in round numbers. It will strike you that I have already spent somewhere in the range of $400 to $450 billion without breaking a sweat. I tell you, it won't be enough. If you want $450 billion more, suspend half the payroll tax. Right? Let the government pay it for, say, the next 5 years, and allow the cost of employment to come down, and allow the after-tax incomes of the working population to go up. That's a simple, direct program which could scale to the expansionary effect that you need, and we don't know at this point just how much we need, but we know that events are moving rapidly, and we are likely to need considerably more than we think, or than anybody, apart from an independent academic like myself, is prepared to say in public yet. If we put that together, we have $900 billion. That would be 6% of next year's GDP. I tell you, that is still considerably smaller than the expansion package just announced by the government of China in relation to that country's GDP. Right? So when thinking about the scale of things, this is not a time to be nervous about big numbers. Let's now look beyond this year and ask what we have to do going forward. For as the private credit mechanism will not recover, as I said, the money changers have fled. I don't think it will be back in 2 years or 3, and I don't think we should plan on the confident assumption that it will be back in 2 years or 3. If it is, so much the better, but even if it is, we are going to be regulating that sector much more tightly than we did in the 1980s and the 1990s, and that means we are not going to grow back to full employment on the basis of another asset bubble. Right? Even if we could get one, we wouldn't want one. So what are we left with? We are left with the need for public action on a sustained as well as a substantial and speedy basis. And that means public investment on a large scale. Rebuilding America, to coin a phrase. And as we do it, partly because we need to do so as a matter of economic necessity, and partly because it's the right thing to do for the survival of the planet, we have to restructure the way we deal with energy, the way we consume it, the way we produce it, the design of our systems of life, so as to place the country on a sustainable financial basis and the world on a sustainable ecological basis. When I first met Congressman Richard Bolling in the early 1980s, chairman of the Rules Committee and a member of the Joint Economic Committee, he said to me, "You know, once in a generation we have to buy back the capital stock. Now's the time. Now's the time." I didn't know we'd ever get there in my professional lifetime, but we're here. It's what we have to do. I will not recapitulate what Rosa DeLauro already said about our needs. She gave some very precise numbers. The American Society of Civil Engineers, 1.6 trillion over 5 years. It's a good benchmark. And as she said, the European Investment Bank, it's a pretty good model. But as we look forward at this prospect, I think it's important to remember a little bit of history and to look back at what the record shows we could achieve if we put our minds to it. Let's look back then for a moment at the New Deal. My friend Marshall Auerbach has a new paper which reminds us, and I'll quote here, about the 1930s. The government hired about 60% of the unemployed in public works and conservation projects that planted 1 billion trees, saved the whooping crane, modernized rural America, and built such diverse projects as the Cathedral of Learning in Pittsburgh, the Montana State Capitol, much of the Chicago lakefront, New York's Lincoln Tunnel and the Triborough Bridge complex, the Tennessee Valley Authority, and the aircraft carriers Enterprise and Yorktown. It also built or renovated 2,500 hospitals, 45,000 schools, 13,000 parks and playgrounds, 7,800 bridges, 700,000 miles of roads. And here I interrupt the quotation to note that when my father took a Model T across America in 1930 to go to Berkeley, he noted that the roads from Lincoln, Nebraska to the California line were not paved. Okay? By the end of the 30s, they were. And 1,000 airfields. And it employed 50,000 teachers, rebuilt the country's entire rural school system, and hired 3,000 writers, musicians, sculptors, and painters, including Willem de Kooning and Jackson Pollock. There are those who argue that the New Deal did not end the Great Depression, that only the Second World War accomplished that. You can find that argument quoted, and it's an important point because it's coming right into the current debate. You can find it quoted on the op-ed page of the Washington Post today by Richard Cohen, who brings to bear the work of Amity Shlaes on this topic. But the argument is mistaken, since the underlying numbers, which Shlaes uses and which Cohen cites, do not count the people who actually worked on the New Deal as employed. They count them as unemployed. Why did they do that? Because in retrospect, to put a charitable construction on it, they wanted to assess the condition of the private economy. Nevertheless, those who got up and worked for years on building the Triborough Bridge were very much under the illusion that they were employed. And the Triborough Bridge does not go to nowhere. Counting correctly, unemployment was already down from 25% at the start of the New Deal to 7% by 1936 and to 3% by the end of 1940. It ultimately fell to 0.5% by the end of 1941 as the war kicked in. But the Depression was, in fact, over before the war, and that was the work of the New Deal. If it's necessary, and I suggest to you that I think we need to operate on the assumption that it will be necessary, let's ask ourselves, can we do this again? Yes, we can. And how? With, to take another phrase that I like very much, whatever it takes. Thank you very much.